This is an update on Ethereum. Here's the daily chart, and I had mentioned in my previous video that an overshoot of this primary downtrend line off the April highs would offer an objective short trade entry, and we hit my first target right there at that 26.4916 price support, really to the bullseye right there. So again, we had this huge rally. I had mentioned as an objective short trade entry right off that 29.6507 price support, and then the very next day we put it in, and it was good for a 10.6% drop there. And as you can tell that the dip buyers and dip buyers came in right to the button here, right at that 26.49 price support, and taking it for that, just for a swing and or day traders, active traders, right there for a 2.1% gain right there. And here we go, opening up in the next candle previously there. And if we take out these lows of that 26.4916, I suspect another wave of selling. And if you've been following my episodes here on the Ethereum coverage of the technical analysis, I have completely mentioned over and over again that a revisit of the 23.1768 price support was favorable in my opinion, and huge level. Now what is the bullish case scenario here? Well, off the daily, we're still above support. The bulls and dip buyers successfully defended it so far, and we are still above the 26.4916 price support. So if you were if you wanted to play the long game, it still definitely is a little bit of a more an aggressive trade still. Even coming right back to that 26.49, if not the lows. You could set some stops a little bit below the lows here at 21.08. You want to give it a little bit of some wider room depending on your risk tolerance here at 25.9050 price support, really for a swing back above at least to that primary downtrend line. And speaking of the 4 hour, I had mentioned a huge significance here on each candle representing 4 hours here. We still have the positive divergent low intact here. Beautiful divergent low reaction here, and we still have it. It's still intact. Yes, we overshot the 382 retracement key retracement, and of course that's where many had gone short, taking that trade. Again, that's where you get that 6% drop. It looks like we're stair-stepping lower here, but again, this is the bulls' really last chance here off this divergent low. If we start to crack below that, then go up and backtest, retest that 25.70 level off the 236 retracement. That's where things will get really volatile if we break below. Because if we break below, then you can kiss these divergences pretty much goodbye here. You still had divergences that had continued to construct here, bullish indicators that had just continued to construct, and they're still intact. They're still intact here. This is what you have to respect when you're short, because the oscillator's starting to burn out a little bit. But again, once this divergent low goes, especially the 236 Phipps retracement goes, then that's if it goes. Obviously if you're bullish here, hey, set some stops below this divergent low, set some stops below this 236 retracement, and you're gonna gun for a breakout, maybe a come back out and start to stair step higher and hit some of these targets. It's all a risk reward ratio. You're gonna risk a few percent for a bigger 10% rally. Make it a 10-to-1 risk ratio, or obviously have a plan for every single trade. Plan that trade and execute the trade and trade as planned. And that's really all I have to say for that. But again, it'll be a huge burn off of this divergence, and then that's when I believe some heavier selling will take place, and a crack down below that 23.1768 price support could come really quickly, because we've already sunken in on the zero line on both the oscillator and MACD. On the the damage is still intact here on the daily, and so a break below, again, huge inflection point in my opinion. This is the key level, key inflection point. Break below, that's what traders want to see there. They're going to want to see a break below. Bears want to see a break below here, maybe a back test, and a move down to that 23.17 level. And you know, dip buyers and bulls want to see a hold here, maybe confirm that positive divergence there on the 4-hour chart and breakout. That's what the, you know, dip buyers want to see. But again, this is our key inflection point here, and if there's any updates, I'll keep you updated, and I'll let you know if I see anything significant. Hit that like and subscribe button.